invite Aditya Agarwal also joining us on the show to talk to us about the trading ideas and how to approach this kind of a dull market. Aditya, afternoon. Thanks so much for your time. There's a saying in the market, never short a very dull market. What are your thoughts here?
Good afternoon, and that's a very good thought, Ajay, to be very honest, because you should not definitely short a dull market. And the best part, market is it is discounting all the negative news. Like you mentioned, we are continuously seeing a negative outflow from the DIs. We had seen a decent bit of a correction in the US markets last week. Despite that, our markets are still meandering around these levels of 19,500, 19,200. But I would also closely monitor the 20 DMA. One should not lose sight of the fact that the 20 DMA till now was acting as a stop loss line. And now that's acting as a resistance line. It's been last two trading sessions that markets are trying to inch higher beyond the 20 DMA, which is right now placed somewhere on 19,660, 19,650. Until unless it crosses that, I wouldn't go aggressive long or maybe take any position on the index. And as you mentioned, one should not look at shorting the market at current levels because, again, the immediate supports are between 19,500 to 19,400, give and take 100, 150 points in the Nifty. One should not really trade for that 150 points at 20,000 levels in the market. Same holds true for Bank Nifty. In fact, after a decent correction in the Bank Nifty, I believe it could be time to look at selective banks, some of the large cap private sector banks. And maybe if Nifty sustains beyond 45,000 in a day or two, one can actually look at going long on the Bank Nifty. Because the risk to reward now is in favor of going long in the Bank Nifty, and I believe a 2 to 300 point or maybe more covering can come in the Bank Nifty.
Yeah, hi Aditya, this is Ankita joining in. So it's a rather lackluster market now. It's safe to say that this is a stock pickers market and because there's no action happening on the index level really. So what are the stocks on your radar then?
Hi, Ankita. Clearly, because it's a stock-specific market, I'm not looking at the broader markets too much because, again, the mid-cap and the small-cap end of the markets have rallied significantly. I'm going very stock-specific here. And because it's a lackluster market, I've got a buy and a sell. Real estate stocks are looking a little weak at the moment. So I've got a DLF, which is just broken down from a head and shoulder neckline. One can go ahead and short the stock at current levels in the futures. For a target of 475 on the downside with a stop loss at 493 on the upside. The second stock is a buy, Navin Fluorine. Again, some of these chemical stocks are looking very attractive on the charts, and after the recent correction, they seem to be breaking out of that consolidation zone. So Navin Fluorine is one of those stocks which looks attractive on the charts. One can go ahead, buy at current levels, look for a target of 46.50 on the upside with a stop loss at 54.50 on the downside.
That's an interesting one. Naveen actually has started moving ahead. Though I wanted to talk to you about Gland, what are the levels to watch out for? But Aditya, what if we make a strategy on chemical which has bombed out completely and go for, say, a basket approach? SRF, UPL, Aarti Industries, the big 3-4 ones. Whenever the tide turns, the big ones actually will start moving first before the tiny ones because of their superior speciality and complex chemistry kind of skills. Do you think that would be a good strategy? And if yes, what would be 2-3 names which you would be suggesting to make that basket?
Oh, that would be an excellent strategy, Ajay. In fact, making a chemicals basket at this point of time when nobody's looking at it is the best time. Like I was talking about IT some time back. One of the best times to look at IT is now. And similarly, one of the best times to look at these specialty chemical names is now. And then definitely the two stocks that pop out are Navin Fluorine for sure and SRF, which has also seen significant correction. Rather, in the recent correction, I've also noticed good volume action building up at the lower end of the correction range. So I believe SRF, Navin Fluorine will definitely top the list. And to add, Deepak Nitrite is also something which can be added to the list. These are the three stocks which I believe should definitely form part of your portfolio. UPL I'll avoid at the moment because, again, it turns to be very volatile in and around the results. So these three are the names which I'll stick out and then have in the portfolio.
Okay, I'll come to Gland in a moment, but why don't we get my colleague to talk about what exactly happened there? This is the biggest kind of a circuit move which we are seeing there after a very long time. How good were those results, Vamakshi? Beyond that also, what are the degree of outperformance of the results that Gland got 20% up move?
In fact, just a short while ago, when I last checked, the stock was locked in the upper circuit. Very strong numbers that have come in from Gland Pharma. Revenue did see an uptick of almost 41% on a year-on-year basis, but it is a net profit that have inched higher by almost 63% on a year-on-year basis. Definitely, we have a note coming in from Jefferies. Not only have they upgraded their rating from underperform to buy, but they've also hiked their target price quite significantly from 1,065 to 1,640 odd rupees. Now, what Jefferies is highlighting that the company has reported a beat in the Q1 margins, and this beat is coming after many quarters of posting disappointment. EBITDA beat that came in during the quarter came mainly on account of higher than expected margins from the US business. In fact, during the quarter, US sales were up nearly 21% sequentially as the products which were impacted by customer bankruptcies were relaunched. In fact, they also noted an improving pricing environment in the US as well. Momentum in new launches as well as turnaround roadmap of Cenexi CMO in the European Union indicates that the worst is likely behind for Gland Pharma. Additionally, the company has gone ahead and filed 7 complex injectables till date, and the approval is expected to come in by the end of FY24 or early FY25, which could further boost the revenues as well as margins for Gland Pharma. So given all these factors, they've gone ahead and hiked the FY25 to 26 EPS by nearly 5 to 7%, and they're expecting an EPS CAGR of almost 17% from FY23 to FY26. So all in all, Jefferies has upgraded its rating to buy, and in fact hiked the target price to 1,640 rupees per share, and that is the reason you should watch out for Gland Pharma.
So bulk of that target got achieved today only, just 30 rupees away. But that's so much so for the reaction. But what about technical charts, Aditya? Should we hold on to Gland? Because it used to be 4,500 once. If we got it even at current level at 1,500, 1,600, should we hold on?
See, honestly, it's a very difficult question to answer, Ajay, because if you're holding on to the stock from 4,500, you made a mistake holding on all the way down till 900. Now that you still hold the stock, I believe now it makes sense to hold on to the stock, because now the stock has broken out from a downward sloping channel. It's trading above its 200 DMA. There's good volume buildup that I see. So all in all, looks like an intermediate trend reversal is definitely in place for the stock, and stock can test levels of 2,001 at about 2,500 on the upside. Now, again, that's a far-fetched target. It will take some time for the stock to go to that targets of 2,500. Before that, there could be some bit of profit booking as well, because stock has already moved up 75% from its bottoms. And then now, I wouldn't be surprised if stock tests 1,400 to about 1,450 again on the downside. That could be actually a good level if somebody is looking at fresh entry or averaging out also if they bought at higher levels. But yes, don't lose sight of this stock, because again, if tides turn down, it can again start its correction. So keep a very tight stop loss somewhere around 1,300, 1,350 levels. If it comes down to 1,450, you can look to add more. Fresh buying can be done with a stop loss at 1,350, and look for a target of 2,100 to about 2,500 on the stock.
Right, Aditya. Aditya, another stock that is seeing an up move today is RateGain, that has perhaps touched an all-time high on the back of strong quarter numbers that it came out with, and it's also perhaps the biggest single-day gain since its listing. What is the headroom for growth that you're seeing? What would be the target, if you could pull up the chart?
Oh, yes, definitely. I believe, in fact, yesterday itself, after the results came out, stock did witness a very good up move, and that was backed on good volumes. Today also, it has seen similar kind of moves, though we have seen a bit of profit booking from the top. But I believe this is a good, healthy correction that the stock is posting, and one can latch on to the stock at current levels. Look for a target of 660 on the upside. It's at 530 right now, so getting a very good target on the stock. 660, it's a longer term target. One needs to hold on to it for at least a quarter or so, and with a good strong support at 500 odd levels, I believe stock has room on the upside and should definitely test those levels of 660 in the near term.
From the technology space which has come back, would you go for a mid-cap IT name at current levels or stick with some of the large-cap IT? Talk to us about your trading ideas there in IT.
I believe I will stick to large cap IT. In fact, I will look at large cap IT stocks now, Ajay, because the mid cap ones have been performing for some time. You pick up a Coforge, a Persistent Systems, a Cyient, all these stocks have outperformed big time. And the large cap IT names, for the reasons of their own, have not been able to perform at all. Now, the chart structure definitely suggests that there is some kind of buying that can be done in large cap IT names. I'm not saying that they will start moving up from tomorrow itself. It will take some time because it's still going through that consolidation phase. And if I have to pick 2 or 3 large cap IT names, the top 3 names will be TCS, HCL Tech, and Wipro. I'm ignoring Infosys because clearly, because of the fact that post numbers we have seen in the last few quarters, stock tends to see a big gap down, and then eventually stock just covers up the gap down, and then the gap area, and then we see another quarterly results, and then the stock again witnesses a gap down. So the trend is not very clear as far as Infosys is concerned. But the 3 stocks that I really like within the large cap IT names are TCS, HCL Tech, and Wipro. Wipro, mind you, has started to inch higher, and now it's trading above its 200 DMA after a gap of, I guess, 2.5, 3 years, which is a long period of gestation for the stock, and now it has started to inch higher. So definitely these 3 stocks, Ajay, will be the top bet within the IT space. And if one has to look at the mid cap IT, obviously it has to be the 2 stocks, the Coforge and the Persistent System.
All right, Aditya, on that note, we will let you go. Thank you so much for joining us today.
Pleasure.
And the other big news coming in from Hero MotoCorp is